investors at Nigeria's equities market are sticking with their sell-off stance on bellwether stocks, with June starting off on a negative note. Analysts believe the overall market sentiment will remain bearish, especially given the lack of significant drivers to boost investors' interest over the near term. Joshua Chinga, sell-side analyst at EDC Securities, joins me for this discussion. Joshua, thank you so much. Pleasure to have you on the show.
Thank you for having me.
I can imagine how difficult it must be for typical investors to, just looking over the pond at the fixed income market, seeing those kind of yields, effective yields, 26%, and then remaining in the market. So, but talk to us about what the strategy would look like this month for typical investors, both short-term and long-term investors.
Well, basically, right now, the equities market is basically dominated by investors in this case, who are looking at a longer-term approach towards the market. Now, we've been seeing a little profit-taking activities in the banking stocks, and that's only natural since they're the most liquid stocks in the market. And then also, investors are trying to take position to key in for their stocks, especially banking stocks, with the recapitalization talks in the pipeline, to be able to take advantage of the rights issues that may be coming up towards the bank recapitalization raise. And for the fixed income markets, and while we see these activities there's less investment coming into the equities market as much as it's coming into the fixed income markets. The expectations of higher yields have been driving a lot of investments and investors towards the fixed income market. And so for the equities markets, we believe that investors are taking a more cautious approach towards the whole thing. And given that, the interest rates rising, becomes a little bit more difficult to access funds, and the well-being of the equities market is quite shaky, to be frank. And investors are really waiting to see what policies are going to drive investments, real investments into the equities markets, beyond just trying to raise the rates for to counter interest, to counter the inflationary pressures that we're seeing.
Now, while banks usually, as we know, are the most liquid, and we see investors sort of treating some banks as a safe haven at a time like this, have there been any outliers, some stocks, names that have shown resilience since the beginning of the year, since the beginning of the month?
Okay, so far for this month, what we've just been seeing are just market reactions to the news on recapitalization. Basically, that's what been driving sentiment in the equities markets. We've seen that activity play out in Fidelity Bank. We've also seen that activity play out in Access Bank. And these major key stocks that I'm just talking about are banks that have actually come out with their plans, but there are no clear cut-outs. They have indicated interest of raising some funds, but there's no clear cut-out. They've not really come out
in terms of what the strategies and timelines and all of that.
And timelines as to how to go about that. So that's what we're seeing. That's what we're seeing now.
How are investors processing? I mean, we're all thinking about the economy, but how are they thinking on about key indicators such as inflation, GDP growth forecasts? When I say this, my mind is going to the fast-moving consumer goods sector, the retailers at the markets, the brewers, the food makers, etc., and how metrics like inflation impact on their bottom line.
Well, recently, with what the Minister of Finance has come out and proposed to the federal government, one of the key things that they also mentioned was setting aside some funds, basically for the manufacturers, about $1 trillion fund set aside. How that will be implemented and channeled into the consumer goods and basically the manufacturers generally is yet to be unknown. But from that indicator, it seems like the government is really taking a step back and really thinking about how best to be able to deliver this without causing major economic shocks across the country.
Shouldn't that ordinarily have been some kind of a catalyst for the market, those who are playing in the consumer space?
As expected, yes, that should be the natural response, but clarity is yet to be given on these things. So everybody, basically investors, are really taking that wait-and-see approach. Let's see what's going to happen. The government has said this is what we want to do. How they want to go about it is yet to be.
Yeah, the devil is in the details, right?
Yeah, the devil is in the details.
How do investors feel about the oil and gas sector? I mean, I've had several conversations this year. The PIA, I mean, that executive decree or something was supposed to help boost the sector. Has that changed sentiment in that sector?
Well, a lot of things that have been happening in the oil and gas sector has been seen to be trying to manage investor activities. You can see the talks of Rwanda trying to get out of the market, and listing also on the Johannesburg Stock Exchange. It's all indicative of moves towards trying to get some private kind of venture capitalist investments where they have a little bit more control, and they also have investors who are a little bit more patient as to not wanting to be swayed by volatilities in the market as towards the investment generally in that space. So yes, recently we're also seeing Seplat also gaining some traction. That's obviously because of the recent case that they've been given leeway by the federal government for the ExxonMobil case too. But in all of this, what I can say is that the oil and gas sector is receiving some attention that is not really publicized, but a lot of work is really going on the ground, especially in that sector.
Right. When you think about this market, half year and how we've done so far, I believe 32% year to date. I mean, that's not too shabby if one thinks about it. But how is the market performing against its other emerging market peers? And also, do we have foreign investors in this market? That exodus, has there been some kind of a retraction or something?
Well, for the foreign investors in the market presently, I believe that they are foreign investors currently in the market, but you wouldn't say we wouldn't put it as to say that they are out there full out because of all the FX issues. They are first of all trying to see that there's stability in the market. That's something that that the federal government have been trying to establish recently through the Minister of Finance, and even the central bank governor also made mention to this, that they are definitely interested in coming into the market. But in the forms of investment that they're coming in through is where we are a bit cautious about what's going on. We can also see that foreign investors who would probably play their hand more into where the whole recapitalization thing coming to it. That's just beyond the oil and gas sector. So an overview of the foreign investors in the market generally is that they seem to be interested in staying in the market. We're seeing indicators of their activities in the first 3 months has been actually active. They've been active in the market in the first 3 months. And we'll continue to hope that perhaps this will permeate into some gains for the oil and gas sector.
Keep our fingers crossed on that. Joshua, thank you so much for talking to us today. Appreciate your time. Joshua Chinga, sell-side analyst at EDC Securities, taking a look at updates from Nigeria's stock market.